Hi. In M&A valuation, the most obvious question might be, what's this business worth? But the most important question might be, what's this business worth in this deal for the other side? On the buyer side, the buyer wants to know, are the earnings sustainable? What's the company market position? What's a reasonable price? And can I create additional value through growth opportunities, operational improvements, and synergies? On the sell side, owners want to know what's a defensible value and a solid negotiation floor. And it's always good to have a clear idea of what makes the company attractive to potential buyers and what is the value that they may be able to create beyond the company's standalone value. That is something that sellers may be able to tap into in a negotiation, especially in the bid process. So we start by estimating the fair market value of the business, the value at which a hypothetical willing buyer and willing seller might be able to transact at. Neither under compulsion, both reasonably informed. This gives us a first objective value and the potential zone of agreement. We then move from fair market value to investment value. If we're working for the buyer, we assess what's the business worth to him, what are the potential synergies and strategic benefits, and the risk under his perspective. If we're on the sell side, but we have a reasonable understanding of what the investment value is for the most likely buyers, we try to assess it. Knowing the difference between the fair market value and the investment value of the other side is a powerful negotiation tool. On top of that, for M&A valuations at Gatto Consulting, we typically include enhanced industry analysis, detailed financial benchmarking, and a value growth and exit readiness assessment. For buyers, this helps them refine their upside assumptions and prepare their integration plans. For sellers, these assessments help them improve cash flow, reduce risk, strengthen marketability. Generally speaking, maximize value before pulling the trigger. It also helps them getting a head start into the transaction by creating or almost creating materials that will be necessary, such as a sales teaser, comprehensive information for the potential buyers, and a detailed data room for the short list of candidates. A good M&A valuation doesn't just tell you what the business is worth. It tells you what it's worth for both sides. See you next week.
Gatto Consulting, Business Valuations, Fractional Financial Services, Strategy, M&A.